welcome back to my channel. In this video, I'll be discussing how to invest in dividend stocks to attain monthly passive income. I have previously made a video explaining dividends, so I'll leave the link to that video down below. So let's go ahead and start with the dividend industries. On the screen, you see a breakdown of the dividend payout ratios by sector. Now, this is not a ranking, it's just simply a listing of the sectors with the highest returns. At the top spot, we see real estate followed by utilities. So REITs is what we'll go ahead and start with. For anyone who's unaware, REITs is an acronym for Real Estate Investment Trusts. And these are companies that own, operate, or lease income-generating real estate, and this is across a wide range of property sectors. Now, one of the benefits of investing in REITs is long-term capital appreciation. Because real estate is so lucrative, it's easy to see why REITs payouts offer high-yield dividends. But one of the disadvantages of REITs is that you pay higher dividend taxes, and of course we know that's inevitable. Underneath that on the list is utilities. Now, one of the benefits of investing in utility stocks and ETFs is that they offer long-term stable investments. But on the downside, these stocks tend to be sensitive to changes in the market interest rate and inflation. So that's the key takeaway to keep in mind. So now let's take a look at a few high-yield dividend REITs to put this in context. Okay, so now let's start with one of the more popular REITs, which is Realty Income, and you see that on the left side of the screen. This stock is well known as the monthly dividend company because they pay their investors every single month. Their ticker symbol is O, and their dividend yield is 5.81%. They also fall under the category of being an aristocrat because they've steadily increased their dividend yield over the last 25 years. So they are a good investment. But I can be honest and say I do have a preference for the stock you see in the middle of the screen, which is Tanger Outlets. Their ticker symbol is SKT. Now, SKT pays out a quarterly dividend at 3.97%. What I like most about this stock is its consistency, and the return on your investment is actually significantly more than most may think. I don't really hear a lot of people talking about this stock, but the ROI is pretty high, and I'll show you that at the end of this video. And lastly, on the right side of the screen, we have the Whitestone REIT. They trade under their ticker symbol WSR. They offer a 3.78% dividend payout monthly, which is pretty good. This stock isn't as popular either, but they provide a sizable return as well. But let's go ahead and take a look at a few high-yield dividend financial securities to get an overview, and then we'll take a look at the charts in Thinkorswim. So first on the list for the financial industry is TD Bank. TD is easily one of my top favorite investments in the financial sector. They provide a 5.43% dividend payout each quarter, and they are also categorized as an aristocrat. Now, of course, we know that Charles Schwab has now acquired TD Ameritrade, so the company is operated under them. But what made me initially invest in TD is that after doing some research, I found that they were one of the few, if not the only bank to report positive earnings after the 2008 recession. So that in itself was reassuring. And some may ask, well, they've been bought out, so will they even pay dividends in the future? The answer is yes. Their next payout is actually next month in July, and they'll pay out again in October and then again in January of 2025. So they are continuing to pay dividends. So moving on to Schwab, their ticker symbol is SCHD. They offer a 3.13% dividend yield, and that's also paid out quarterly. So it's a good ETF to invest in, and I will say, now that they've acquired TD, I think this ETF will continue to see exponential growth over time. And last on this list is the Associated Bank Corp, ticker symbol ASB. They provide a 4.25% dividend payout each quarter, and this results in a good return on investment. Again, these are stocks and ETFs that fly under the radar, but they are pretty solid investments. But let's now take a look at a few of these stocks' performance over the last 5 years. All right, so we're starting with Realty Income, and you can see I have it pulled up on the chart. I'm going to go ahead and hit the arrow next to the ticker symbol to go ahead and view additional information, such as like the market cap and volume. I'm going to go ahead and scroll over. So underneath the 52-week low, you see obviously the dividend yield at that 5.67%. And then in the middle of the screen, you see the dividend frequency as monthly. Okay, so with that being said, I want to go ahead and show you guys the chart and kind of show you what I look for in terms of how I know a stock is going to be a quality investment. We can see here in the year of 2020 that there was the high of $84.92 and the low was at $38. Now, obviously, in the year of 2020, there was a whole bunch of uncertainty. So I don't necessarily judge any stock or ETF based on that, because again, it was a crazy time in the world. So what I go ahead and do, I always make sure I look at how the stock performs after any like economic crisis or any recession. And we can see here for Realty Income, it did bounce back, and we can see that the stock kind of steadily rose back up, and it's pretty much been doing a good amount of steady increase in growth, which is good. So that's exactly what you like to look for when you're looking for dividends to invest in as stocks that are going to be reliable companies. So this is going to be a good one to keep in mind. For anyone who's unaware of what Realty Income does, essentially it is a REIT, like I mentioned. They specialize in portfolio and asset management, and it's engaged in in-house acquisition for the real estate properties. And they also have some IT capital markets that they kind of at least managed and kind of foreseen for a good amount of time. So it's a good stock to invest in, pretty reliable. So now I'm going to go ahead and pull up SKT here. And again, this is going to be that Tanger REIT. Now, I do enjoy telling people about this particular stock because it's not one that's talked about as often or as frequently as it should be. This is a really good investment. If you're unaware of what this company does, they focus their real estate here in the US and Canada. And this company is fully integrated, so they self-manage their own real estate with a primary focus on developing and operating outlet shopping centers specifically. So for me, personally, I can't be told a thing about SKT. Now, this might not be a buy and hold forever stock, but it definitely for sure can help you double your money in the short term. So this investment is pretty good. So just remember I told y'all, okay? Keep that in mind. But you guys can see here, obviously the dividend yield is at that 4.01. The frequency is going to be quarterly, okay? And you can see the rise of the stock. So back in 2020, the stock was trading for $4.05. Now we can see it's in that range of its all-time high. It's trading currently at $27.45, but we can see again it's in that range of that $29.98 for the high. So again, performing really well, doing a great job. It pays a good quality dividend. I feel like, again, it's not talked about enough, but hey, if you're going to do your research on any stock, I would say keep this one in mind, okay? So let me go ahead and pull up the last REIT we're going to talk about, which is WSR. Again, this is going to be that Whitestone REIT. You guys can see the yield is at 3.74. Frequency is every single month. So every single month, if you invested in this stock, you would get at least a dividend payout, okay? Now, I'm going to scroll over just a little bit so you guys can see the low and the high, of course. You'll see the high at $14.65. The low was at that $4.70. And again, that was back in like 2019, 2020. What the stock has done since then is pretty much risen up. You can see the rise of the stock, and we can also see it pretty much consolidated, and it's been pretty consistent since then. Again, another stock people don't talk too much about, but I think it's a pretty quality investment. Okay, so keep this one in mind as well. Now, this company operates on commercial properties, specifically in like culturally diverse markets like metropolitan areas. So think about cities such as like Austin, Chicago, Dallas, Fort Worth, Houston, Phoenix, different areas that are like metro areas. And again, this is a profitable stock to invest in. So just keep this one on your list of like at least ones to do research about. So do your own due diligence and kind of look over the stock, okay? Oh, and one thing I do want to mention is that many people retire and live off their dividends, especially from REITs. And honestly, if you dollar cost average your way into investing, it really doesn't take that long. So it's not as long as some people may think. And even if you don't have like the money to start buying full shares of a company or an ETF, if you're new to investing, there are apps that you can use to get started with micro investing, which means you don't have to purchase full shares at one time. So it's a good way to begin so that you can learn to invest progressively. So that's something I definitely wanted to mention. So let me go ahead and pull up two of the financial stocks that we talked about. We're going to go ahead and start with TD, of course. Type that in. And then we see TD. Okay, so I'm going to scroll over so you guys can see the high and the low. Let me actually expand it so you guys can see both at the same time. All right, so we see here with TD, again, that dividend yield is 5.40. Of course, the frequency is going to be quarterly. We see back in 2020, and you guys can kind of see the pattern here. In 2020, most stocks saw that dip, and then of course they rose back up for the ones at least I'm showing you. And this one has made significant growth. So you can see the high being $86 back in 2022. And then it's kind of dropped down, but it stayed within the range of that $60 trading mark. So we see that the stock has performed fairly well. I do appreciate this stock for the amount of payouts that you get in terms of the dividend yield being high, but on top of that, it also can be something you can compound annually at a pretty decent rate. So I do like investing in TD. So let me go ahead and pull up Schwab as well. SCHD, and this is going to be the Charles Schwab ETF. And again, you guys can see again the pattern. Back in 2020, it was at a low. It's reached that high in about the end of 2021 to 2022. So we can see the growth of the stock over time. This one has stayed up for the most part in terms of having that $80 mark, $78 range. It stayed within that. So this is going to be another good stock to invest in. Pretty much a quality look. Now, one thing I did want to pinpoint, I'm going to actually go back to TD really quick because I want to show you guys something that most people don't consider. So when we look at these stocks, I want you guys to look at the PE ratio and the EPS. You guys can see that right next to the 52-week low and then the dividend yield. You see the PE ratio for TD is at 12.65 and then the EPS is 4.39. Now, some people are like, I don't know what EPS is. All EPS is a measurement of an entity's profitability on a per share basis. So basically, this is a fancy way of saying this is a metric that investors use. And in theory, the EPS suggests how valuable a company is. And that's just an indication that the company has either performed well, so investors are willing to pay more for its shares. And this also is a clue that a company may increase its dividend payouts over time. So that's another key factor to keep in mind. Now, the next two stocks I want to mention are, I feel, a bit overhyped, and I would encourage new traders to fully analyze them before investing because you guys are going to see the PE ratios for these two stocks, okay? Let me show you here. I'm going to go to NLY. Now, this one is pretty popular, but you guys can see the PE ratio and you see the EPS for this particular stock. Now, this is a REIT. Again, it's one that people often kind of encourage investors to invest in. I personally have not invested in this company, and you guys can see why. It's on a downtrend, and I don't like to invest in companies that haven't performed well over a 5-year period. So this one is one that I tend to avoid, and I don't recommend new traders kind of jump into this. Not telling you what to do, but just look at the history of a stock before you just take other people's advice, okay? The other one I want to show you guys, I'm going to pull that up. ARI. This is another one, kind of same thing. We see the PE ratio is at that negative 12.5. The EPS is also at a negative 0.79. Again, one of the stocks that people kind of recommend as a REIT. I kind of discourage people from, jumping into these kind of stocks without fully understanding what they're getting themselves into. So just keep these things in mind, okay? And also another thing to mention about the PE ratio, this again is, if anyone is unclear on that, it's just telling you that a company has like negative earnings. So this is telling you specifically that the company is losing money. Of course, every stock has its ups and downs. We know that. And they may experience a time of being unprofitable. However, I'm just a little skeptical with these two stocks. Again, they're overhyped and people seem to love them, but the dividend yield is high. You guys can see it at 14.07%, extremely high yield. But yeah, that's just something I wouldn't recommend. So just keep that in mind. So the last two stocks that I want to kind of take a look at, one of them my subscribers actually suggested that I look into, and I want to show you guys this stock as well. This is going to be Coinbase's ETF. Now you guys can see here, it is brand new. There is not a 5-year history for this stock, obviously because it was released in September of 2023. So that's when it hit the market, and we can see the trading history for it. So this stock actually has a dividend yield. You guys can see that here at 114.32%. Now, again, this is kind of, crazy when you look at a dividend yield at that high of an extreme rate. Again, this is a Coinbase related ETF. We see the dividend frequency is monthly. So every single month, if you were to invest in this stock, obviously, if you had an initial capital investment, and then even if you just had one initial capital investment, this stock is going to pay you out every single month. Now, I'm not telling anybody to jump in this stock or out of this stock or to make any changes to their trading plan based on this stock, but I just wanted to show you guys. That's it, okay? Like one of my subscribers mentioned it, and I wanted to show you guys obviously the frequency in which it pays out, and then of course the dividend yield at a crazy 114%. So yeah, just keep this stock in mind. I'm not sure what anybody would want to do with it. If you're trying to say you want to be a little more risky, or maybe you're just chasing those monthly dividends, this would be a stock that you may perceive to be worthy of, investing in. It may not. I'm not sure. There's not a long enough history for me to make a decision either way, but I just wanted to mention it in this video. Again, for monthly payouts, if you're seeking that, this particular Coinbase ETF may be a good fit for you. I'm not sure what your trading plan looks like, so you can make that decision. All right, I'm going to pull up the last one that I particularly really enjoy investing in, at least recently. So this is going to be the JP Morgan ETF. I'm going to show you guys. So again, this stock is actually, this ETF is actually newer as well. You can see the release of it was 2023, and it's been obviously on the market for a whole year now. And then of course we're in 2024, so you see the high and the low. Now with this particular stock, you see the yield is at 10.02, and the payout is also monthly. So this is a stock I do particularly recommend people to invest in if you're looking for those monthly payouts for dividends. Now, this JP Morgan Chase particular ETF, obviously it trades on the NASDAQ. So it's an equity premium, okay? So just to kind of give you a breakdown, some of the holdings within this ETF are going to be Microsoft, NVIDIA, Apple, Google, Amazon, Facebook, Broadcom, and AMD. And those are just the top 8 holdings within this ETF. Now, the interesting thing about this ETF is that the top competitor is QQQM, which is obviously the Invesco ETF. Now, JP Morgan's ETF reached an 11.85% return, which is significantly higher than QQQM's 10.5% return. So, I mean, yeah, let's just take a look at it real quick. I want to show y'all that this is the competitor, QQQM. If you've never heard of this ETF, oh, you guys, sorry, you guys, I marked this up already. As you can see, I've done some research on this particular stock. I forgot I already looked at this and kind of made my own little touch points on it. I had some price levels. I tried it for different trend lines as well. But yeah, you can see the competition. You guys can see the dividend yield for this is at 0.74. So this has been the popular one in terms of the ETFs, like that powerhouse ETF. It's been one that's came through, but in my opinion, the JP Morgan ETF is a little bit more competitive in the sense that I feel like the exponential growth over time will be higher. But again, it's totally perspective. It's all subjective on what you feel is going to fit your trading plan. But I don't want to do too much rambling, so let me go ahead and get into the very heart of this video. Let's take a look at a few dividend scenarios that can be back tested to help you make a few investment decisions based on the stocks and ETFs that we just went over. So let's go ahead and jump into that. All right, so the very last thing I want to do in this video is provide a visual breakdown to show you how your portfolio can be valued over time. This just helps to achieve greater returns on your dividend investments. So all I did is I went to Google, I typed in valueinvesting.io, and then this was the screen that popped up. Now, this is a portfolio visualizer. What this does is it optimizes your portfolio. It also allows you to analyze investment strategies. You can also complete a toolkit if you want to utilize that resource as well. So I'll just go ahead and click on Start Backtesting to begin. Now, I will give you guys this bit of information. This particular website does allow you to have 5 free backtests within a 30-day period. Anything after that, it will prompt you to register and create an account, but we won't need to do that today because we're just going to backtest a couple times to see. Okay, so I'm going to go ahead and scroll past backtest portfolio and overview. We're going to go ahead and take a look under portfolio configuration. Now I'm going to set the portfolio type. I'm going to leave that as tickers. For the start date for the month, we'll leave it as January, and we'll select the year to be set to 2020. We'll leave the end date as May 2024. Now, under initial capital, you guys can see it's set to $10,000. Now, that is kind of unreasonable if you're a new trader. I'm fully aware you may not have that kind of capital. So we'll make it a little more reserved and moderate at about $2,500. That seems a bit more reasonable. For additional capital, we'll leave it set to none. The rebalancing frequency, you can go ahead and select the drop down to have it for monthly, quarterly, semi-annually, or annually. I'm going to select monthly. And then for dividend reinvesting, that's going to be your DRIP. You can choose to have it selected as yes or no. For example purposes, we'll say yes because we want to continue to reinvest over time. Okay, so now we're going to go ahead and click under Show Advanced Configuration. This is where we're going to set our leveraging type. Now, I'm going to set it for a fixed amount, so that way we have a certain amount coming out every single month back into the market. So the amount can be totally something you choose. It'll vary from investor to investor. I'm going to, again, leave it very moderate and say about $1,500 a month is about reasonable. And then we'll leave the interest rate set for 2.5%. The maintenance margin will also leave that set for 25%. Now, I'm going to rename these portfolios because I don't want it to be portfolio 1, 2, and 3. I definitely want you guys to know exactly what we're looking at. So we're going to start with Schwab. That'll be that ETF. Then we'll go ahead and have portfolio 2 set for the JP Morgan ETF. And then portfolio 3, we're definitely going to have SKT. Y'all already know how I feel about SKT. So we'll leave that. Now, for our asset allocation, you're going to do the same thing. Type in the ticker symbols. And it'll pop up. And then, of course, do all of the ones you want for your back test. And then, of course, SKT will be my last one. There. All right. So now we're going to go ahead and set our percentages. I'm going to set them all for 100%. All going to be set for 100. There we go. Okay, and then of course you guys can see here, if you want to add more assets to this, you can actually click on more. It shows a display of 10, but again, you can click on more and add any amounts of ticker symbols that you want to, or any equities or securities that you feel is necessary. Okay, now we're going to go ahead and click on Backtest Portfolios. And once you do, boom, there it goes, it pops up. Now we see the results here. The allocation is going to be at 100% for all three because that's what we set it at. But we're going to go ahead and take a look under performance summary. Now with this, we see the initial balance is $2,500 for all three, but the final balance is going to vary based upon the stock or ETF. So let's take a look at Schwab. We see here the CAGR. That's the first thing I want to take a look at because I know some people are like, we know what final balance is, but what's CAGR? CAGR is going to be the compound annual growth rate. So that's essentially your investment and how it's growing every single year. So it's annualized. Okay. All right. So again, let's look at Schwab first. We see it's at $2,500 for initial. You would end with $2,713. Okay. And then the standard deviation, we see that as 28.72. Now let's take a look at the JP Morgan one. Again, starting with $2,500, the final balance ends up being $3,842. And then, of course, take a look at the CAGR. That's going to be 23.95. Now, that's pretty significant. That's not a small amount. That's pretty much a good growth rate for any investment that you would have. 23% is actually outstanding, so that's really good. And then the standard deviation being 24.47. Okay. All right. So let's look at SKT again, starting with $2,500. The final balance ends up being $5,378. But take a look at that annual growth rate, 46.63. Again, you can't beat that. Like, the market is what it is, but seeing that kind of exponential growth is very rare. So I would say these stocks are obviously high performing. So it's good to know that. All right. So you guys can see on the right side, it shows you the best year, the worst year, the max drawdown, the ratios, and then any market correlation. Okay, so we're going to scroll past that. Now we're going to take a look at portfolio growth. Now this is a slider. It's going to be a balance for the portfolio. You can slide it up and then you can slide it down side to side. So you guys can see any type of particular number based upon the time period. And then it's showing you the breakdown. Okay, you guys can see how that's growing. You can also click under logarithmic scale, boom, and then it'll show you the scale for the logarithmic look at the portfolio growth. So again, this is over the course of 2020, obviously to 2024, and then of course it's showing us particularly for 2022, the breakdown up until 2024. So keep that in mind. All right, I'm gonna scroll past that. Now we're gonna look at annual returns. So when we look at annual returns, we see for 2022, 2023, and then of course 2024. You can kind of scroll on them and kind of see what the differences are. And then of course it shows you the breakdown. I'm going to scroll past that. Now we're going to look at trailing returns. This is going to show us for 3 months, 6 months, and then of course year to date. And this is the total return for your portfolio. So when we look at Schwab, we see for 3 months it's 2.78, 6 months 16.6, the year to date. JP Morgan, same thing, 5.52, 17.99, and then 16.75. Then it shows you on the right side the annual realized return, essentially what that is. So it's going to show you after 1 year, 3 years, 5 years, and then 10 years, and then of course the full amount. Now, again, SKT, it started off with that negative, but again, after 6 months, you guys can see it nearly tripled. And then year to date, 1 year, 3 year, 5 year. Okay. Now it does have the 5 and 10 year pretty much voided out because the stocks haven't shown that over the course of time because some of them are fairly new, so they don't have that annualized return. So no worries about that. Okay. All right. So what I'm going to go ahead and do is scroll up, and I want you guys to see this. Okay. You guys can change anything. Okay. So let's say we want to change it to 2,500. You can put that in there, whatever you want. Okay. I'm going to go ahead and show you guys this. You can click on SKT or any of them for matter of fact. So within this, we're going to go ahead and take a look. You can see the valuation. It shows you an overview, the financials, forecast. It shows you a comparison. You can look at historical prices, dividends, all this good stuff, okay? It shows you a breakdown in more detail. So it also shows you the competitors, and it's going to show you by company name, and then it shows you the ratios, and then the highs and the lows. So you guys can just play around with this as much as you want. Again, it is a free resource, so take advantage if you need to. But essentially, yeah, this is going to be what you would use to kind of pretty much get a breakdown or a glimpse at what you should expect for your dividend reinvesting, okay? All right, so that'll pretty much do it for this video. If you found this information to be helpful, feel free to leave a comment down below. Thank you so much for watching, and I'll see you in my next one.